President Trump, he's back in the White House, a second term, signed a flurry of executive orders on day one involving trade, immigration, energy, and, of course, that TikTok ban, which has now been halted, at least the enforcement of it has been halted for the next 75 days. Let's bring in a man who has been inside the Trump cabinet, certainly serving at one of the highest levels also previously, tried to put together an investor group to buy TikTok. He is former U.S. Treasury Secretary Stephen Mnuchin. Joins us now. Stephen, great to have you. Want to get your take on so many things, but starting with TikTok, because it's kind of one of the last conversations we had on air. What do you see? Is there an opportunity here for you to re-engage, for example? We heard from Bill Ford, from an owner of ByteDance earlier with Andrew. I just want to get your take on the current moment and how you see it in terms of a potential opportunity for you or somebody else to try and do a deal.
Well, first, let me just say it was an exciting day yesterday to see President Trump back in action and all the executive orders that he signed. As it relates to TikTok, I think it was good that he said that he would delay enforcing the law for 75 days to give him time to review it. I've always thought this solution is pretty simple. It involves a group, U.S.-led group, investing more money into the company. I think the existing U.S. investors would want to stay in. And U.S. TikTok is a great business, but the more important part is to cut off the technology from ByteDance and have the technology all transferred in being separate with the U.S. business.
And do you know, one of the key questions has been whether the Chinese government, and you know this obviously, would be willing to allow for any sort of a sale. Do you get any sense, or do you know perhaps whether they have changed their posture, which previously had been that they would not allow for that transaction?
Well, I was encouraged to see some of the signs coming out of China that they were open-minded now that President Trump is in office. I think, again, the opportunity here is just to make sure that the technology is transferred. Bill talked a little bit about the Oracle and the Safe Cloud, but the idea would be to transfer all the technology so that it no longer engages with ByteDance going forward.
Right, which you and I have discussed in the past, though, is not an insignificant undertaking in terms of the lines of code that would have to be redone, the source code. That is not something you think is an impediment to any sort of a transaction?
I think it's something that can get done. It will take time. And the unfortunate part was that ByteDance didn't engage in this while there was time under the law. So it clearly will take time to rebuild the technology. The technology can be rebuilt. The algorithms can stay in China. And I'm hopeful President Trump, who's the consummate deal maker, can get a deal done.
Well, Steve, it's Jim. It's great to have you on the show. Great to talk to you.
Good to see you as well.
Okay, so let's talk about interest rates and spending. I keep hearing from so many guests, because of how much debt we have, because of how much spending we have, interest rates have to shoot up. I know you know rates. I know you know rates from New York Community Bank. I trust your judgment on this. Do rates have to soar under President Trump?
Well, first, let me say, I think on top of the agenda has to be government spending, whether that's done by DOGE or whether that's done, more importantly, within the administration. We had to spend a lot of money in COVID, but since then, the government spending has just gotten out of control, and the size of the deficits. We have to get this back in line to a reasonable level relative to GDP. I'm hopeful that President Trump can pass the tax cuts, which will continue to grow the economy and bring this down. I think 10-year treasuries at about 4.5% are about right. I think you'll see the Fed over time bring short-term rates down to 3.5%. It may take them some time, but I'm less concerned about inflation, but I think given the size of the Treasury borrowings, I think the long-term rates are about right where they are.
Well, let's talk about the size. Every time these days we have an issuance, it feels like the 90s when rates really shot up. We didn't have buyers. We couldn't find them. Is there a possibility that we could see, let's say, 6% on a 30-year without a problem?
Unless we have much higher inflation, which I don't expect. I expect that inflation is under control and will come down over time. I think with a positive yield curve, if the Fed can lower short-term rates, which is the expectation over the next year, then I think the market can absorb long-term treasuries. But they do want to see a positive yield curve. And I think that's something we need to see more in the market. So, no, I don't expect 10-year treasuries to go over 5%. It would have to change. It would have to be a big change on the Fed, and the Fed shifting back to raising interest rates, which would be a big concern.